It doesn't shock me that someone like Jim Cramer talked highly about SBF months before the meltdown. No one in market history has ever been this wrong. I like to call him Mr. Opposite, Sir Inverse, the Jinx. Everything he touches turns sour. Everything he talks about goes to the dirt. And it doesn't shock me in the least bit. So with FTX, everyone wants to know about the blow up, the Ponzi scheme era in the crypto markets. I believe it's going to be ARCHEGOS 2.0. The reason why is there's crazy amount of exposure here. Okay, it's not one or two entities. It's major hedge funds, it's big whales, everyone globally, companies, in the public sector. We have no idea every single entity that's involved. Okay. And we're going to learn more about that as the weeks go on. FTX had zero Bitcoin assets listed in bankruptcy docs, yet it had 1.4 billion liabilities. So they sold you fake Bitcoin. This is the same exact thing as naked shorting a stock where they're telling you on the back end, yes, we have the shares, but really they did not deliver them. They did not provide them. That is the same thing as wire fraud. So in your account, your shares are there, the valuation's there, but they didn't actually provide it. They don't own the assets on their end. Okay. They just have liquid. Okay. And then they took your liquid and they did fraudulent things with it. So it's the same exact thing as like GTI or finger motion, where we know it's not real shares. It's all IOUs, it's synthetics, and eventually they will get exposed in things like this. Next, the FTX CEO filed for bankruptcy. He personally owes lenders over 650 million. So the guy went from 22 billion to in the whole 650 million in about a day. So this was over 4 days ago. So be cautious. I think it'll be more money. I can't see this not being like, 1 or 2 billion he owes as we move forward. I mean, this is bad. It doesn't get much uglier than this. Financial Times FTX held 2.2 billion of Serum, a crypto token which only had a total market cap of 84 million. So again, very suspicious in terms of what they were investing in, where they were putting their money. This is not a guy to be glorified in any way. He was investing and donating money that wasn't his. He was stealing people's money and saying, "Oh, I'm a good guy for donating it. Oh, I'm going to give away X and so," but it was your money he was giving away. It wasn't his money. He was giving away your money. So absolutely disgusting. And we see that a very, very questionable investments here. FTX tapped into their clients' accounts to fund risky bets per Wall Street Journal. And if we scroll down, we see FTX had 16 billion in customer assets, and the CEO Sam Bankman-Fried told investors Alameda owes FTX about 10 billion. This suggests that FTX lent more than half its customers' fund to Alameda. This is a huge problem. Again, like I said, very questionable investments. He took your money, he stole it for himself, he gave it to his group of traders, and they did whatever, who knows, offshore accounts, Cayman Islands. I'm sure, billions and billions of dollars have gone missing. And this is definitely going to be a huge problem moving forward. Bankman-Fried secretly transferred 10 billion of customers' funds from FTX to Alameda. A large portion of that has since disappeared. Okay, 1.7 to 2 billion. Like I said, it's probably more. Again, this is the type of things that we're dealing with. So they steal everyone's money, they bankrupt everyone, and then 2, 3, 4 billion, whatever it is, probably more, goes bankrupt, goes missing. No one can find it. It's all in offshore accounts, all being hidden and transferred. However, they, conduct fraud. We don't know, but it goes to show, who's involved. Here comes the conspiracy theorists of, well, politicians and what dirty people are in this. But that's ultimately the truth. There are dirty people in this game. It's not random. It's not, oh, this was an accident or, a mistake. No, this was intentional. This was 100% a Ponzi scheme. So we're going to call it exactly what it is. FTX held just 900 million in liquid assets versus 9 billion in liabilities, as it's confirming they knew they were taking clients' funds. That's obvious. We saw what was liquid, semi-liquid, and illiquid. This is a great article here. Obviously it was hidden poorly, internally labeled fiat, at account. There was all problems here. There was so many red flags that we saw, but people just didn't realize it until it blew up. So take a note of this. I'll leave the links in the description. You can read more about this article. I don't want to waste too much time here, but really great information below. We saw FTX seeking 9.4 billion for rescue per Reuters. Again, just take a look at the day. It was 3 days ago. So it probably is more. It's probably 10, 15, maybe even 20 billion. But to be conservative, at least 9, 10 billion. This is nasty. We know that a couple billion went missing. We know that there's been some hacks and some things of that nature, which we see here. 380 million in crypto has left bankrupt crypto company FTX wallets in the last few hours with little clear explanation as to why. The wallet holders are reporting that they are seeing zero balances in their FTX and FTX US wallets. So this is a big problem. This is a huge deal. We know that there's hacking, there's madness. It's just catastrophe across the board here. Nobody is safe. That's really the key. Nobody is safe. Everyone is vulnerable. vulnerable if you have money invested here. So just be very careful moving forward. This is a dirty, dirty game, and we're trying to navigate through it. So taking a look at Coinbase, the institutional ownership, I think, is really significant in terms of the inflows versus outflows. We know that this company as a whole is just naturally going to be exposed to crypto due to its being an exchange. 15 billion outflows in the past 12 months, and we saw only 4.5 billion coming in. So we know BlackRock was a part of buying it. I'm sure they were also selling it. We saw in Q3 $14 billion worth were liquidated in Coinbase stock. This is a big deal. And if we scroll down, I don't see any more of the big players in the game. I don't know if market beats data is correct, but basically we're not seeing the BlackRocks, the Vanguards, the State Street, the Sequoias. We're not seeing any of those players, right? So that's really important because everyone realizes what was going on. You were buying it at 380 when it IPO'd, even if you were doubling down when it went on 50% sale or $100 a share. I mean, to see it down to $45, $50, I mean, it's just not a good look here. So obviously the outflows are saying that institutions know we got to get out of here. So be careful with Coinbase. We don't know what's going to happen next. Keyword exposure, and it doesn't matter who it is, it's all the biggest guys in the game. BlackRock, we saw August 11th, right? Bitcoin was trading over 20,000 during that point, 20, 21, 23,000. I don't know exactly what it was, but as we go down, we saw BlackRock. Obviously, we know they have the most assets here, but they launched their spot Bitcoin private trust for US-based institutional investors. So they're doubling down on crypto. They were probably buying the dip. They said, hey, let's take this thing from 20 back up to 30 or 40. And it went all the way under 16 and into the 15,000. So, whatever it might have been to diversify the portfolio, to try to make money elsewhere, they put a lot of money into Bitcoin in above 20. And now it's down 5-8%. That's a really big deal, for an investment that wasn't really that old, right? This wasn't years and years and years ago, right? This was August 11th. Okay, this was not but 3 months ago from 2 days ago. So, that's crazy. Okay, everyone's getting hit from it. Doesn't matter who you are. Everyone's getting rocked. This was the original owners here. If you go look on, the big sites back in June, we saw all the big dogs, right? Whether it was Vanguard here, ARK Investments, BlackRock, Morgan Stanley, Rentec, everyone had, positions in Coinbase. And look at these valuations, 600 million, 400 million, 300 million. I mean, insane. It doesn't matter whether it's a billion or 2 billion. No one wants to lose any money, let alone hundreds of millions of dollars. So having to liquidate all these red holdings, it's not a good look. It's very bad. And as we move on, we see all the people that were involved in here. So this is part of FTX company holdings. We see pension plan funds, Tiger Global's in there, Paradigm's in there, Lightspeed Management, BlackRock, obviously, Sequoia, Teachers Venture Growth. There's a ton of people involved. And we also see, celebrities here like Tom Brady, Giselle, a lot of big people that were promoting this. So globally, whether it was just your retail investor saying, hey, my favorite athlete or my favorite celebrity here is promoting FTX, let me get a part of it. There was so many guys on Twitter that I saw. Meet Kevin promoted it. A ton of people. I think Kevin O'Leary from Shark Tank, had money invested in this. Tom Brady and them. So it wasn't just funds, it's retail and everyone globally that saw this and even if they put $400 or $500 in it, $50 in it, multiply that by, tens of millions of people across the board. It's a big deal, folks. This is not nothing. Okay. I wouldn't come out here and say we're going to see ARCHEGOS 2.0 if I didn't think the exposure wasn't real. FTX partners for crypto payments in 40 nations with who else but Visa. And we see not long ago, this was 2 months, October. So 40 different countries, we see they launched debit cards. This was a really big problem because now it's starting to get crazy. Okay, it's all over. It's every entity. It's not just one big person. Everyone was playing their hand in here. So it makes me think back to the conspiracy guys, what people were involved in it. Obviously, we saw where the money was being donated to in terms of political parties. Okay, but there are definitely some grimy and bad people involved here without a question. Okay, and I hate to say it, but unfortunately it screams politicians. It screams, just dirty players. So it wouldn't shock me in the least bit, where that money went, where that money quote unquote disappeared to. But that's not really the point of this video. So we saw Sequoia Capital 420 million, absolutely nuts, increased the exchange valuation to 25 billion in October of last year. Other investors included Ontario Teachers Pension Plan Board, C Capital, a ton of people, Tiger Global, Lightspeed Venture Partners, and people that were managed by BlackRock. So now we see Sequoia writes off the entire investment in FTX. This is crazy, absolutely nuts. Everyone's involved in it. Everyone's getting smacked around. I don't think anybody here is safe, whether it's Binance, crypto.com. I mean, there's going to be a lot of people that are going to get pulled down here. I promise you that. And pay attention to what's going on behind the scenes and, who's about to belly up, because it's certainly not going to be pretty when it happens. So early estimates on what creditors may get from FTX is brutal. 5 cents on the dollar. This is Lehman or Bear Stearns type event where they are getting nothing. I mean, they're getting absolutely nothing. The money's gone. So I think guys are getting a couple dollars a share on Bear Stearns. This is 5 cents on the dollar. This is crazy. Okay, so this goes to show what type of extent. This is Do Kwon Luna Terra type. This is Bernie Madoff 2.0. This is nuts. This is absolutely nuts. We have not seen anything like this. So I'm just really happy that, no one in my team got invested in this. No one, got involved in this Ponzi scheme or all this bull jive. So, whew, very blessed to be safe here. This is a very long thread, so I'm going to try and go through it as quickly as possible. I'll leave the link again in the description. But just to start, Crow said they accidentally sent 400 million Ethereum to the wrong wallet address. Wildly irresponsible. Please get off these platforms. I definitely agree. They are also the Lakers or the previous Staples Centers, or how they fund them. So you see it's now the Crypto Center or crypto.com arena, whatever you want to call it. Very similar to how the FTX was Miami Heat. So it's, again, you got to be careful about what they're funding, who's also funding them. So as we scroll down, we see, sort of the same thing, big deja vu with the, crypto.com exchange token future contracts. So this just gets horrible. This is just more ways to gamble with people's money. Taking a look at crypto.com to US dollar, it's at an all-time low here, 6 cents. Got a super pump here. Luckily, a pump to insane highs at the exact same time they signed a deal to spend 700 million to the naming rights of the Staples Center, right? So that's exactly what I just said. Really interesting. It went parabolic, and then that time it was super popular. Everyone was buying it. A lot of money was flowing in. So that was definitely, a positive for their exchange or their company. So we saw the same thing with Celsius, where they basically offered a lot of benefits to trade on their exchange, like fees, higher lending rewards, and more things of that nature. Usually, when you put your money in there and they offer you ridiculous percentages that are just exponentially higher than a bank, what I like to say is when it's too good to be true, it ain't. So that's sort of the case we're dealing with here, is that, it's just, it's not realistic. They're not able to do that unless it's some sort of fraudulent operation. And I think that's exactly what we're witnessing here, is, Celsius 2.0, or basically 3 arrows, something that's going to get blown up. And, that's what we're trying to find. Who's going to be the next victim here? Is it going to be a Crow? Is it going to be, another exchange? I do think it is. It might not be a stock. It might not be a blue chip. It might be, someone that he's mentioning here. So crypto exchange downsizing larger than previously reported. Again, I feel the same way. The intuition just tells you that they're not in a good place. Not everything is going to be fine. In the current exchange model, you make 0% on the custody of assets if you're doing things in a sound manner. Maybe a small fee on withdrawals, but that's a one-time deal. Mass withdrawals should have no harm to your business model unless you have a hole in your balance sheet. That's exactly what we're seeing here. They're not providing what they claim they own, and that's the big thing. Is that in the end, they're taking the customer's assets and they were giving it away. They were stealing the funds. They were donating money that wasn't theirs. And then, it wasn't a big deal, right? You had 500 million, 800 million, whatever it might be in liquid, so a couple thousand people, they liquidate their money, no problem. You can give it to them. But when you have mass withdrawals, right, this is when you start to see the holes in the balance sheet. This is where you start to see the cookie crumble. So that's exactly what we're looking at. 500 million worth of SHIB. This is crazy. Just taking a look at their holdings and how it's diversified. We see SHIB, Ethereum, USDT, USDC, and other things of that nature. Bitcoin being the largest holding. So it appears that some exchanges are potentially faking proof of reserves audits with each other's funds. CZ is chimed again. Just a huge mess. That's the best way to say it. There is nothing good going on here. Traders are paying 2,000 to short. It's crazy. The same dynamic that occurred before Celsius and FTX collapsed. This is an incredible feed. I don't think they leverage against Crow like FTX was with FTT, but similar to Celsius, they're apparently compensating users in their yield products, particularly using Crow. So the lower Crow goes, the probability of distress increases, and the market knows it too. So he's feeling a lot of deja vu. So am I. I think that it's going to be bad ultimately. A lot of wacky stuff is going on here without a question. So FTX acquires Ledger X. So this was a CFTC, or a Commodity Futures Trading Commission, which is regulating digital currency futures, option exchange, and clearinghouse. So it's funny how they're buying, an entity that regulates these markets. It's all just a clown world operation. There was no regulation. There was illegal bookmaking. There was lack of audits and so many other things. Just, like he said, egregious, just misrepresentation, just absolutely horrible in terms of what we're witnessing here. It's Bernie Madoff 2.0. It's disgusting. But I feel very bad for the people involved in here. Luckily, none of my team, none of my guys have any, major holdings in crypto or FTX or anything. I certainly do not. So anytime an exchange or a company restricts their customers from withdrawing their money, we know it's usually a structural issue. We know that there is something bad going on behind the scenes, and this is just not what you want to see. AAX suspends up to 10 days, so I would be nervous here. I think that they're trying to solve the problem. They're trying to come up with liquidity on the back end, but no one wants to touch this. This is like hot rocks. No one wants to put their hand in there, and this is bad. There's just no other way to say it, whether it's Hong Kong, Singapore, Europe, all over the place. It's affecting everybody. Now, talking about the SPY and the fraudulent market we have here, I think that ultimately what we can see is, yes, we will see, these little retracements in between, but I think the big picture is that this is going to replay what we saw here. I truly do. I think we're about to run really hard. Now, typically people are trying to hedge their long positions by going short. Now, what I think everyone is going to be basically doing the same exact thing, is trying to go short. So it would make sense in my head that anyone that put bearish bets come Friday that the market will pump, it will destroy the short sellers, it will kill everyone. And then as we go forward, not only will those tech stocks and those, high cap positions be juiced up, but it'll give people a little more breathing room for a couple days, or at least another extra business day or two while, this madness is going on behind the scenes. Not only that, but it'll probably force people to sell their short positions after, them just getting their ass kicked here, all week. As we can see, it just pumped like crazy from 370 all the way up to 400 in the SPY. So, if this thing keeps going, it's going to destroy short positions. It's hopefully going to force everyone to flip-flop and go long. And then once they do that, once enough people flip-flop and go long, I think they'll drop the hammer again. So it gives the people breathing room, it destroys the shorts, and then ultimately, they'll be able to reshort the top here, make more money coming on the way down, as opposed to just hammering it here. But I hope that's not the case. Typically, my prediction was we'll see it, just on Monday. I don't know how else it wouldn't. But then I had a second thought about it, and I was like, you know what? This market's so corrupt, it's so fake, and just, all facade. So it wouldn't even surprise me in the least bit that everything I'm thinking is going to be the exact opposite, which is what I just told you right now, that they're going to pump it up. Everyone thinking bearish, 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 crash. And it gets one last hoorah, aiming for the stars, reaching for the moon here, fakes everybody out. And then they go short on it right as everyone flips long and tries to trap as many retailers as possible. That's what I think is more realistic. So last but certainly not least, what major stock will crash next? Please comment below. You can go look up my post, or I'll leave the link in the description. But I said, quick off my head, Amazon, Meta, Square, or Tesla. I need to do more digging, but in terms of who will have a lot of exposure here, who might, play a hand in this that we don't know yet, I think could be one of those four that could take a big spill. So keep your eyes posted. I hope you guys have enjoyed this informational video. Please check the description again for the outline. I hope you guys again have enjoyed it. Have a great weekend, and we'll recap later.